Most traders never get to this point, not because it's impossible, but because they never become consistent enough to actually take money out of the market. And that's the difference. Making money on the screen, that's one thing. Withdrawing it, that's a completely different level. This is a $6,000 withdrawal, not from an evaluation, not from a demo, not from a simulated account, but from trading my own capital. In this video, I'm going to walk you through exactly how this week played out, the mindset behind it, the strategy that I used, and I'm also going to be breaking down a live trade so that you can see how I execute in real time. Because once you understand this, you'll realize that it's not about hitting that one big trade. It's about creating something that is repeatable, and that's what we're going to be going through step by step. What's going on, guys? It's Mark, and if you're new here, I focus on futures trading, precision execution, ICT concepts, and helping traders build consistency. And this video is important because a lot of what you see online is big wins, highlights, and fast money. But more often than not, you're not actually seeing the process behind it. And more importantly, I can guarantee that you're not seeing withdrawals. And withdrawals are what actually matter, because that's when trading actually becomes real. It's not just the theory of what you think is going on. So today, I'm gonna slow everything down, and I'm gonna show you exactly what goes on in a week like this. Not just the trades, but the thinking behind each and every one of them. Let's talk about something that most traders don't realize until they experience it. Trading your own money is completely different. There's no reset button and there's no second chances. There's none of that, no, I'll just try again tomorrow mindset. Every decision carries weight. And what I've noticed is most traders either become too aggressive or become too hesitant, because now the emotions are involved. Now it's actually real. This is when discipline actually matters. So the biggest shift that I made was I stopped trying to make money. And instead I started focusing on not losing control. Let me explain that, because this is when it actually starts to click. When you're trying to make money, you force trades, you chase moves, you overtrade, but when your goal is to stay in control, you become selective. Wait, and you execute only when everything aligns. And that shift alone is what separates inconsistent traders from the consistent ones. Now, let's talk about this week specifically, because this wasn't one big trade, one lucky move, or one perfect day. This was built over multiple sessions, stacking the small wins, the controlled risk, and clean execution. But let me slow this down because this is actually important. Most traders think I need a big trade to make money. You don't. You need consistency. A few solid trades per session with proper risk will add up fast. And more importantly, it's actually sustainable, because the goal isn't just to make money once, it's to be able to do it again next week and hopefully every single day that you actually show up to the market. Let's get into the strategy, and this is going to be based off of ICT concepts, but I've simplified it into a repeatable model, and it comes down to 3 layers. Before I look for an entry, I'm asking, where is price drawing to? I'm looking for liquidity, higher time frame for value gaps, premium and discount, and this is key. The higher the time frame the imbalance is on, the more important it is. So if price is moving towards a 4-hour or daily imbalance, that actually gives me direction. So you can see here on my chart, I have a few fair value gaps marked out, and what they were showing me this week, because last week I was trading with a very bullish objective. I was looking for price to reject off of this green bullish gap, and that's exactly what we did. We continued to stay above it, failing to close below it, and ran up into this bearish gap up here, which we just formed in that previous week. So we finally hit a previous week target and began to expand from it. So this week I noticed we did indeed run straight through that gap that we were respecting over and over again, and we failed to draw back up into it. We came up just slightly into this bearish gap right here, and we began to expand. Every single day this week after we closed below this gap was a bearish narrative where price wanted to push lower from this bullish daily gap, and that's exactly what we were getting today. We were getting price expanding down from this bullish turned bearish gap. And one thing I want to kind of leave off with you guys is that I didn't catch this entire move. I only caught a little bit of this entire move, and that already allowed me to walk away with over $6,000 withdrawn this week. Now, you may be able to identify that higher time frame narrative, but how do you know when to execute? One of the techniques that gave me a good narrative this week was looking at the forex.com calendar, and this shows me the red folder high impact news events. You want to look at these because they're going to show you when the market's going to be volatile, and you can see Monday's range, Tuesday's range, Wednesday's range. You can see that today, Wednesday's range, was the biggest move of the week. Why did we get a move this massive today? A lot of traders, they don't understand that the market isn't run based off of what Trump says or what whatever happens. There's actually economic calendars of when these high impact events like FOMC statements, CPI, NFP, all of these high impact events that actually move the market are scheduled ahead of time, and you can know exactly what days the market is most likely to move. Now, if you pair this with the price action of where the market is actually moving, you will actually be able to identify what day of the week the move is likely to happen, and all you have to do from that point on is wait. So the second thing is timing. I align that with time because not all moves happen at the same time or when you expect them. And in PST sessions, there's going to be Asia, London, and New York. I have a video with each and every single one of these sessions. So if you want to learn more about how you can trade these sessions or what times they occur at, go check out some of those other videos. But most of my trading happens either during New York session or Asia session because that's when the volume actually comes in. In terms of the execution, this is where everything will come together. And this is what allows those tight stops. It's going to be the 1 minute model. Let me show you exactly how this looks on the chart so that you can see how everything connects. Let me walk you through step by step. So the first thing that we're going to do is we're going to start off inside of Wednesday's range. And as I mentioned, we already have this higher time frame narrative. We already tapped into this bullish turned bearish gap and this new bearish fair value gap that formed right here. So we already have a bearish daily narrative, and that's when we go down to the lower time frame. With the narrative already being clear, the only lower time frame thing that I really look for is a liquidity sweep. And you can see here during London session, we just barely came up above Asia's highs and started the reversal without digging back up into this bearish gap up here. Like I said, we already tapped into it, so that was a rebalanced price range. And all that we need now is the continuation model lower as per the daily narrative was telling us. You can see over here nearing the end of London session, we created another IFEG on the lower time frame. This is where I see that the middle grounds of the 30-minute, 1 hour, or even the 4-hour time frame begin to align with what the higher time frame narrative is telling me, and that's when I actually begin to go down to the 1 minute time frame and look for that 1 minute model. Now the same thing that you're seeing here on the 30-minute time frame, that's pretty much exactly what I'm going to be looking for on the 1 minute time frame. You can see here on the lower time frame that the move that ran up into this 30-minute bearish gap that I was showing you guys in London session created a lot of fair value gaps in the bullish direction. This is exactly what I like to see whenever I'm looking for a reversal. I like to see a move in the opposite direction of what I'm aiming for. Now the higher time frame was a clearly bearish narrative. On the lower time frame, we want to see a market structure shift from a bullish into a bearish narrative. So you can see this created a bullish gap, and this bullish gap was being respected up until we closed below it right here. When we start to draw back up into this gap, this is exactly when I layered in my position at the midpoint of this bearish fair value gap. You can see that price then became weaker and weaker and failed to close up above the middle of this fair value gap. This is when I added my position and I held it to this massive wick that we had to the lower hand side. That's all I needed to walk away with a $6,000 trade this week. And I'm not telling you guys that I caught this all in one trade. This is the exact model that I use every single day when I come into the market. And today we just happened to have a wonderful execution on the lower time frame that gave me a massive amount of volume. This move was all I needed to walk away with $6,000 this week, and that's the model that I use on the lower time frame after the higher time frame gives me a narrative. Most traders jump in too early, but I don't enter when the move happens in the opposite direction. I only enter when I get that fair value gap and then it becomes an IFEG. Price comes back and trades through that fair value gap and shows me that it still wants to go lower. That's when I actually look for the execution that gets me to my profit target. And as I mentioned, all that I really look for is liquidity and session targets. And in this trade, that's exactly what I looked for, and I TP'd at the liquidity. Let me pause here for a second because this is important. It's not about being perfect, but it's about following a process, and this process is repeatable. This works because it combines the higher time frame narrative, liquidity, timing, and precise execution. Most traders, they just focus on one of these, but when you combine all four, you eliminate a lot of randomness, and that's what creates consistency. If you're watching this thinking, this looks simple, that's because it actually is. But simple doesn't mean easy. The hard part is waiting, staying disciplined, and not forcing any trades in between when you get your model. That's where most traders fail. It's not about the strategy. And this is also why I do like prop firms, because once you have a model like this, you don't need huge personal account. You can apply the same strategy on funded accounts. I personally use legacy funded futures, and if you want to check them out, the link is below, and you can use code MARK for a discount. And if you want help applying this, you can apply to work with me one-on-one. We go deeper into execution, risk, and consistency, and the link is also in the description. If you don't understand fair value gaps or IFEGs yet, watch my breakdown videos. They'll make this entire model click for you. And if this helped you understand what real consistency looks like this video, subscribe if you're serious, and comment withdrawal if that's your goal. I'll see you guys in the next one. Again, in this video, I was actually trading on my live account. I also have a link to the broker that I personally use and recommend for any account, for any trader trying to trade with their own personal capital. With that being said, I hope you guys learned something from this video. Again, comment withdrawal if you're serious about making that your goal. And with that being said, I upload 2 times per week on this channel. I hope to see you guys in the next video. Peace out.